All right. Hi, everyone. Welcome to today's webinar brought to you by IronFX. Right. So welcome to today's breaking news and setups. Right. Before we start, please take note of the risk warning. Right. All the products on IronFX are traded on margin and carry a high level of risk, and it is possible to lose all your capital. Also take note of the disclaimer as well. The information in this webinar should not be considered investment advice or investment recommendation, but instead educational material only. Right, my name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, we'll take a look at what are the key economic events that are going to be released today and tomorrow. Right, there's quite a few things going on, but I'll just focus on these three here. We've got US Flash Composite PMI up today. We've also got unemployment claims, and we've got UK retail sales tomorrow as well. So let's take a look at these three releases. But before that, of course, let's take a look at the calendar for today and tomorrow. Right, take note, I'm on GMT time. Right, so we also had flash PMI data out of Europe earlier today, right? We'll take a look at that. We saw data for France, Germany, and of course the Euro area as well. And we've got data coming up for the UK, or we already had data out for the UK. And then we've got unemployment claims and flash composite PMI data for the US. The composite basically is the blended PMI, which of course consists of manufacturing and services. Right. And tomorrow we've got retail sales as well. And then we've got durable goods out of the US and the final University of Michigan Consumer Sentiment Index, as well as Governor Christopher Waller speaking as well. So quite a heavy calendar as well as we wrap up the final trading week of, well, not really the final, but the third trading week of May. All right. Now let's look at the flash composite PMI, right? So the estimate for manufacturing and services are going to indicate another month of expansion, right? Remember, any reading above 50 indicates expansion, whereas a reading under 50 indicates contraction for that particular sector. So in this case, we can see that services are continuing to expand as well. It previously came in at 51.3 in the month of April. In April, and the flash estimate for May points to a relatively somewhat unchanged figure as well. Similarly, for manufacturing, we see it remaining steady as well. And then when we look at the charts individually, on the left, I have the chart for manufacturing PMI, on the right, it's services. Right, we see that manufacturing has kicked off pretty well. Right, if you look at the expansion level, right, remember the threshold, right, there's a threshold of 50 as well. Remember, any reading below 50 is contraction, any reading above is expansion, right? So you can see here in 2024, manufacturing has returned to expansion, which is of course going to help overall economic output. And at the same time, services has actually been in expansion for quite an extended period of time. Maybe I think it's almost 14 months or so. However, we did see services PMI accelerate in the fourth quarter of last year. However, we're starting to see that rate slow down now. Although it is still expanding, remember a reading above 50 indicates expansion, but it's happening at a slightly slower rate. Right, so should we see softer data come in later today, right, that could put some downward pressure on the dollar. So take note, if we see the flash composite PMI data, which is going to be manufacturing services, if it comes in lower than the respective forecast here, that could put some downward pressure on the US dollar. Right. So you can see here as well, when you're looking at the composite as well, right, you can see here in the fourth quarter of 2023, the composite, remember, which combines the manufacturing and services PMI readings, right, accelerated in the fourth quarter of last year, right, primarily led by the services sector, right, which is here, right, this increase here. And obviously you can see now the rate has started to slow down as well, right? Okay, we're starting to see a little bit of slower growth. Remember, reading above 50 is still expansion. It is still expanding. It's just that the pace of growth or the rate of growth has started to slow down. However, expectations are still, forward expectations are still in positive territory. But remember, just as a short-term impact, right? Should we see data come in softer than the forecast, there could be some near-term or short-term downward pressure on the dollar. All right, Next up is unemployment claims. Okay, sorry, I forgot to mention the time. PMI is going to be released after unemployment claims. PMI will be released at 1:45 p.m. GMT, whereas unemployment claims will be released about an hour and 15 minutes before that, right? So unemployment claims basically track the number of Americans who file for unemployment benefits, right? So when you have a number that's rising like this, as we saw in the first half of 2023, right, this means that there are more people filing for claims that signals a potential weakness in the US labor market. Conversely, when you look at the second half of 2023, claims were trending lower. That means there are less people filing for such benefits, which in turn reflects a robust labor market. Now, it has been relatively steady in 2024 until a couple of weeks ago, right, where we saw this jump or this spike in claims that was higher than the estimate, followed by last week as well. So are we seeing a potential uh, acceleration or change in trend for unemployment claims? Perhaps we'll find out in the next few weeks. But basically, when claims come in higher than the forecast, remember the orange bars are the forecast, and the blue bars are the actual result. When claims come in higher than the forecast, it usually functions as a bearish catalyst for the dollar, right? A near-term bearish catalyst for the dollar. So today's forecast is coming in at about 220,000, and last week we had about 222,000. Right? When we look at the 4-week average of claims, right? For 4-week average, I'm going to be looking at these last four data that came in, right? So we look at the 4-week moving average, it's coming in at about 217,000. So this 4-week moving average has sort of edged higher as well. And you can see that the forecast and the previous week's reading is higher than the 4-week average as well. So we are starting to see or beginning to see a change in trend in claims, and it could be moving higher. Now, how can we interpret the data as well? Right. So if claims come in higher than the forecast of 220,000, this is likely going to be uh, this is likely going to function as a bearish catalyst for the US dollar. So that means currency pairs like the euro, pound, Aussie, and Kiwi are all likely to rise along with gold. Conversely, if claims come in lower than 220,000, that means there are less people filing for unemployment benefits, which signals a robust labor market, and that in turn would lead uh, to function as a or potentially function as a bullish catalyst for the US dollar. And of course, that would in turn make the euro, pound, Aussie, Kiwi, and gold prices fall as well. So this is how we can easily interpret the data. And remember, when the result comes out here, compared to the forecast, the previous result as well, and also looking at the moving average here. So any number that's going to be greater than 220,000 is definitely, or I would say definitely, is highly likely going to function as a bearish catalyst for the dollar. Conversely, if claims come in softer than 220,000, it could function as a near-term bullish catalyst. All right. And finally, we've got UK retail sales coming up tomorrow, right? So you can see retail sales for in the first quarter have been relatively poor, right? Apart from the month of January, right? Apart from January, which was a strong jump, rising about, I think, almost 3.5% in January. However, February and March saw very poor sales figures coming in practically flat, right? And the forecast for the forecast for April, which is tomorrow's data, is pointing to a decline of 0.5%. So it does look like uh the impact of higher interest rates may finally be having taking its toll on the British consumer. Right, consumer spending has fallen off quite drastically over the last couple of months, and for the month of April, we're looking at a decline of negative 0.5%, a decline of 0.5%. Right, so we are potentially starting to see the UK consumer lose their spending power, which in turn could have a negative impact on the pound. So that means the currency pair cable could likely pull back tomorrow, right? Should we see data maybe come in line with negative 0.5%, or even worse, if data comes in worse than negative 0.5%, perhaps we see sales declining by 0.6 or 0.7%, right? That would create strong pressure, downward pressure on the pound. So that means cable is likely to drop hard tomorrow as well. All right. Okay. Now with that, let's move on over to the charts and trading view. And of course, should you have any questions along the way, do not hesitate to drop them in the Q&A or the chat box. We're more than happy to answer your questions. And of course, should you have any requests for any instruments as well, be it currency pair, indices, or even the commodities, I'll be more than happy to go through the analysis with you. But we'll start off with taking a look at the dollar index. All right, okay. So here I am on the 4-hour time frame for the dollar index, right? So as you can see here, or maybe let's just start off with a daily first, just to quickly understand how it's currently trending, right? So you can see here, since middle of March till end of April, we saw dollar index in a strong uptrend, and it stalled at around 106.50. And since then, since May, right, over the last 3 weeks, it has been trending lower as well. You can see it's trended lower, but however, it has found support within the bullish Ichimoku cloud, right? When the cloud is green in color, it would highlight strong bullish momentum. As you can see here, there's a strong bullish trend, bullish momentum, and the cloud itself can also offer areas of support, which is what we saw here in March of this year, in mid-March, and which is what we're seeing here as well from the end of last week, right? We also saw the cloud once again offering strong support for the dollar index, right? So when we look at it here on the daily time frame, right, there's also a pretty decent bearish channel, I would say, right? Let's try and draw this bearish channel out, right? We can see that this is a pretty good bearish channel as well, right? So we can see not only, I mean, we are seeing a series of lower highs and lower lows, right? Which clearly helps us is easily visualized by a bearish channel. But however, take note, right? It has found support within the bullish Ichimoku cloud. However, it does seem like it has run into resistance once more. So every time it seems like the dollar index has reached the upper trend line of this bearish channel, it does seem to stall and reverse the pullback as well. So be perhaps the more high probability trades for today and tomorrow would be looking to short the dollar index as well. All right, now let's look at it on the 4-hour time frame, right, and try and fine tune the analysis if necessary. Right, before that, I think we can draw Fibonacci retracement as well. Let's draw one retracement from here. This swing low on the 8th of March, going up to the high here on the 16th. We can see that, right, there's a 61.8% Fibonacci retracement, slightly below this pullback support that occurred on Thursday last week, right? It's a nice pullback support level here as well, right? Although this is a little far, but I just like to highlight it as well. This was most likely going to be like a second support kind of level on the daily time frame. Right. There's another Fibonacci retracement that we can draw as well. I think this one would be from here. This swing high on the 16th of April, going down to last Thursday's low. Right. Maybe there's a 38% that we can use. Let's pull up all the fibs. Right. There's a 38% that highlights a pretty decent resistance level, and the 61 highlighting this pullback as well. So let's keep 38 and 61. Right, so we can see here as well, not only do we have the upper trend line of the bearish channel highlighting a potential resistance area, we also have this pullback support here that occurred on this 3rd and 6th of May. Remember, what was previously a pullback support can now potentially function as resistance. And we have the presence of a 38.2% Fibonacci retracement as well. So, right, we have several factors that highlight a major resistance zone. Oops, right. Let me just adjust the labeling, and then let's just identify and label the second resistance as well. Right, second resistance on the daily time frame is at 105.59, which has the presence of a 61.8% Fibonacci retracement. All right, so now we can see that this is a very clear downtrend for the dollar index, and it does seem to have run into resistance around this area of 105, which is identified by a pullback resistance at 105 itself, the 38.2% Fibonacci retracement, and the upper trend line of the bearish channel. All right, okay, now that we know how this currency pair has been trading, or what is the bias for this for the dollar index, sorry, there's no currency pair for this index. Let's take a look at it on the 4-hour time frame. Right, so pretty much here, as you can see that this upper trend line has been pretty much respected as well. Okay, for the 4-hour time frame, you just need to fine tune this a little bit. But generally, you can see that, yes, it is trading in a bearish channel, right? It's quite clear. And we can see that there's a pretty decent resistance here as well. right? Remember, what was previously a pullback support can now potentially function as resistance, and it does seem to be testing this resistance area as well. And when you look at it on the 4-hour time frame, price is also trading within the bearish Ichimoku cloud. And when the cloud is red in color, it can help us identify areas of resistance as well, right? Similarly, okay, maybe this is not the best, but as it was retracing higher here and retracing higher over here on 14th of May and 10th of May, right? It did stall within the bearish Ichimoku cloud before reversing to drop lower here. So we can see that on the 4-hour time frame, the cloud is actually in red, which highlights the bearish momentum, and the cloud itself can help us identify a potential area of resistance as well. So hence I said the high probability trades for the dollar index are likely to be short trades today. So if you have gone short on the dollar index, maybe earlier today or even yesterday, right? Uh, where I would identify the stop loss, right? I wouldn't want to place a very wide stop loss, although the second resistance is here, it's where the 61% Fibonacci retracement sits. But if you do not wish to keep a very wide stop loss for any short dollar index trades, perhaps we can use the 50% Fibonacci retracement to help us identify a level as well. Right, we can see that 50% Fibonacci retracement aligns close to a pullback level here as well. So probably placing it at around the 50% Fibonacci retracement, or maybe just a little bit higher at about 105.30, right? Maybe a suitable stop loss level as well. So that's about yeah, about 30 to 40 pips from where it's currently trading, right? So maybe this would be a good idea, pretty decent level as well. If you wish to run a tighter stop loss, then I would say place it slightly above. Let's see another overlap level here as well at 105.08. So 105.10. So I would say place it slightly above, maybe a 10 pip buffer, slightly above 105.10, right? If you do not wish to have a wide stop loss as well, as wide stop loss at the 50% retracement. All right, okay. So we can see now, like, right, dollar index is constrained within this zone, right? And where would we identify suitable stop loss levels, right? If we do go short on the dollar index, right? I see a nice pullback support level here. I see a nice pullback support level at 104.42, right? We can see dollar index finding nice support here last Friday, and it has since drifted higher from here, right? So should we see this reversal, or should we see the bearish momentum gain further traction, right? Then we're likely to see it drop towards here. So the first take profit level for any short dollar index trades can be identified at 104.40, and of course the next take profit level would be identified at this string low here that occurred on the 15th of May. Now we've also got uh unemployment claims and PMI data out later today for the US, right? So how would that's definitely going to impact the near-term direction of the dollar index, right? So if we see claims come in higher than the forecast, right? Remember, if unemployment claims come in higher than the forecast, this is likely going to function as a bearish catalyst for the dollar. So that means dollar index is quite likely to drop lower, right? So the catalyst for dollar index to continuing or to really for lower would be unemployment claims coming in higher than its forecast, and at the same time probably seeing composite PMI data coming in a little bit softer as well, right? So if we see claims higher than forecast while PMI data is slightly lower than forecast, right? We have two macroeconomic data points that are likely to cause the dollar index to push to fall lower. And then should that happen, right, we can identify this pullback support level at 104.40 as the first take profit level, and then use 104.18 as the second take profit level, which is the swing low here, right? Okay, now, of course, the opposite can happen as well. If claims come in lower than forecast and we see a strong set of PMI numbers, that could then actually create strong demand for the dollar. So the strong demand does well, if the data does point to stronger demand for the dollar, we are likely to see a potential bullish breakout as well. So remember that today's data is definitely going to have an impact on the direction of dollar index later today. So once again, if claims come in lower than the estimate and we see a strong set of PMI data, we are likely to see demand for the dollar pick up, and that would mean dollar index potentially breaking out of this bearish channel here. All right, so these are the key levels for the dollar index and how today's data is likely to impact its direction as well. All right, okay, now with that, let's go on over to the pound, right? Since we've got UK retail sales tomorrow, let's cover the pound as well. And I'll cover a few of the other major currency pairs. Then we'll look at commodities like oil, crude oil, gold, and of course, we'll cover the indices as well. All right, so once again, for dollar index, let's just, for the pound or cable, let's start the analysis on a daily time frame, right? So of course, if dollar index is in a strong bearish trend or is trading in a bearish channel, then of course currency pairs like the euro and pound are likely to reflect the opposite of this current price structure here. Right, you can see very clearly a V-shaped market structure here, price structure, and similarly for the pound as well, a very nice V-shape. Oops, where's my brush? Here we go. Right, a very nice V shape here. So we see a very nice swing low support here that's taken place on the 23rd of April. We also see a nice swing high resistance here that's taken place on 11th of March as well. The identifying resistance and support levels are important because that in turn can be used to identify potential take profit levels as well as entry levels and of course stop loss levels as well, right? It's important to be able to identify major resistance and support levels on the daily and 4-hour time frame, because then in turn helps us in identifying entries, exits, and placements of stop loss as well. Right, so we can see it. The pound was previously trading in a pretty decent bearish channel as well. Previously, there is a strong bearish channel where we saw a breakout occur on the first week of May. It did climb a little bit higher, but retraced to find support on the upper trend line of the bearish channel before finally bouncing higher as well. So you can see once a breakout occurs, right, doesn't mean it's going to fly to the moon immediately, right? There can be pullbacks along the way, and of course there can also be false breakouts as well. In this case, uh, there wasn't really a false breakout, although you can see on 8th of May and 9th of May, right? Cable did pull back underneath the upper trend line here, but finally it did find support within this region before moving higher. Right. Okay, so now we know that we had a bullish breakout here. I also see a pretty decent bullish channel now as well. Right. You can see here, this is a pretty decent bullish channel for cable. Right, we can see it has tested the lower trend line on the bullish channel several times here, and it has touched the top trend line as well here on the 3rd of May, and it came very close on the 22nd of May as well, right? And also you can argue here this was pretty close on the 29th, but generally we can see it is trading in a strong bullish channel here. Right, and we've also seen cable cross above this bearish Ichimoku cloud, right? When we see crossovers like this, right? It may potential major reversal in trend, right? Like you see here back in November of 2023, right? Cable was trading underneath the bearish Ichimoku cloud. It ran into the cloud. It moved into the cloud in resistance and found resistance in early November, pulled back, climbed into the cloud again, finding resistance again in mid-November before finally breaking out. So this could mean maybe if we see a break above this bearish Ichimoku cloud here in November, we may see further upside as well, right? Because we have seen now that same move occur, right? So, but bearing in mind, right, nothing goes up and down in a straight line. You can see there are sharp pullbacks along the way after this crossover occurred as well. So where that resistance could happen, right, for pound or cable would be the upper trend line of this bullish channel as well. All right, let's start uh, identifying some resistance levels, right? I'm going to run a Fibonacci retracement from here. This swing high on the 8th of March, going down to the swing low here on the 22nd. I believe, all right, we can see cable has already crossed most of the major retracement levels. So the only one that's not been touched yet is the 78.6% retracement here. And we see that this level also has a pretty nice overlap level here, right? We can see cable finding a little bit of support here on the 12th of March, then running into resistance here on the 21st of March, creating an overlap level, right? I believe this can be used as a second resistance. And I'm going to highlight this as a zone because of the 78.6% Fibonacci retracement. So we have a pretty strong resistance zone here. Oops, hang on, around 1.2790, right? It's pretty strong resistance zone here. And probably there's a strong resistance zone at this pullback here. We can see here on 18th of March, price finding decent support here for about 2 or 3 days at about 1.2717, which is where it does look to have run into resistance once again today. Of course, the wicks climbed as high as 78.6% retracement, right? But generally, you can see this area does look like to be a pretty decent resistance area as well. Okay, now what about support? Because now we can see price has turned, made this high here. We can also draw Fibonacci retracement, starting from this swing low on the 22nd of April, going up to this high of yesterday. Right, let's pull up all the fibs. Right, we can see there's a pretty decent pullback support level here at the 23.6%. Right, that I would probably identify this level here as the first support and highlight it as a zone as well. And for the second support is probably going to be at this overlap level here. There's a pretty decent overlap level here, right at 1.2550. I see price finding support here on the 1st of April, then running into resistance on 29th of April to early May. It is quite likely where the second support is going to be. Right, and let's just keep it there. Okay, there's a 50% Fibonacci retracement, so we'll keep 23% and 50. All right, hi Trevor, good to see you as well. Thanks for tuning in once again. All right. Okay, so these are the key levels for cable on the daily time frame, right? Let's go on over to the 4-hour time frame now. Right, remember, so we've got UK retail sales coming up tomorrow, and it does look like sales are going to decline for the month of March, right? So that means we could see the cable come under pressure, right? So maybe up till today as well, it may continue to climb higher, but remember, if you see a bad number in retail sales tomorrow, we're likely to see the cable reverse and drop lower. Now, U.S. unemployment claims can also have would also have an impact on the direction of cable today, right? So once again, if claims come in higher than the forecast, right, that means that would be bearish for the U.S. dollar. And then potentially, if it's bearish for the U.S. dollar, that means we may see cable push higher as well, right? So remember, if unemployment claims in the US come in higher than the forecast, it's likely to function as a bullish catalyst for cable. Conversely, if claims come in lower than the forecast, it is likely to function as a bearish catalyst for the cable, and that means we could see cable drop lower as well, right? Now that we are on the 4-hour time frame, I just probably like to highlight or fine-tune the analysis as well. Right, first resistance, I would put it here, which is this pullback resistance that occurred on Wednesday. First support, I'll adjust it and put it at this pullback level here at 1.2646, right? And you can get rid of this zone. Second resistance, yeah, probably just, I think this is still pretty much okay, but then I wouldn't drag it all the way till the back. I'll just place second resistance here. Right, and second support. Okay, now that we see it here a little bit more cleaner here, maybe second support could be around this overlap over here, right? It's a pretty decent overlap level here, and 1.2534 as well. All right, so basically, if we do see unemployment claims come in higher than the forecast, we are likely to see cable drop lower. That means we can then use this first support to help us identify a suitable take profit, right? So we can target 1.2646 as a suitable take profit level for any short cable trades. Similarly, right, because this is a resistance area here at around 1.2743, right, placing our stop loss slightly above this resistance zone would be a sufficient enough buffer as well. Remember, we have unemployment claims and PMI numbers out of US. So if we see stronger PMI numbers and lower claims, we're likely to see cable reverse and drop even lower. And that's when we would use this first support to help us identify a suitable take profit level for the short trade. Conversely, if we see claims come in lower than claims come in higher than the forecast and we see PMI numbers coming weak, then we are likely to see cable move higher. So that means we may have a potential bearish breakout above this first resistance here. So if claims come in higher and PMI numbers are weak, then this would likely to cause cable to break out of this first resistance. And then should we see a bullish breakout take place, then we would target this second resistance here, this pullback resistance here as the take profit level for any long trades for cable. Right, this are the key levels on the 4-hour time frame. All right, okay. And with that, let's see, let's cover the euro as well. All right, let's cover the euro. Right, so when we look at it on a 4-hour time frame, the euro has been pulling back since 16th of May. Right, demand for the dollar has picked up since 16th of May versus the euro, but it did find strong support here. So you can see that the bullish Ichimoku cloud can help us identify areas of support as well. So that means as the euro reversed and was pulling back, we would then use the cloud to help us identify potential take profit levels for any short trade. Right, so in terms of the cloud here helped us identify a potential take profit zone as it was retracing or pulling back at the end of November, April, early May. And then again here in early May as well, as it was retracing back and pulling back lower. The area of the cloud again can be used to identify as a potential take profit level for short trades. And similarly here, what we saw from last week onwards, or rather from this week, at the beginning of this week, right, using the cloud can help us identify a suitable take profit level for the short euro trades as well. But now, of course, we see it finding support here, so we could see the euro bounce higher as well. Now, what could cause the euro to continue moving, climbing higher? We would need to see data that's negative for the US dollar later today, right? So that means negative data for the US dollar would be claims coming in higher than the forecast and PMI numbers coming weak. So should we see that uh, combination of results take place, that is quite likely we're going to see euro push higher as well. And even looking at it on a 4-hour time frame here, I see a pretty decent descending trend line as well. Here we go. Right, there's a pretty decent descending trend line here as well. Right, so should we see higher claims and weaker PMI numbers, we may have a potential bullish breakout for the euro as well, right? So the bullish breakout occurs, right? Then we can then target this pullback resistance at 1.0895 as the first take profit level, right? This is the first resistance for the euro, right? So we can then target this level here as the first take profit level. And then the second resistance is the swing high here that occurred on the 21st of March, which is the 1.0933. So should we see a really strong bullish momentum for the euro, right? Then first take profit level is going to be identified at the first resistance. And then the next potential take profit level is going to be at 1.0933. And we do see a strong support here as well, right? And there's a nice overlap level here at 1.0812. Right, this is a nice overlap support that I'm going to use, identify my first support here. So that means any stop loss, right? You can use this first level here, this first support level here to identify your stop loss. That means placing your stop loss probably about 10 to 15 pips underneath this level here to give us that little bit to give us some breathing space as well. So any long euro positions, right? We can identify a suitable stop loss level underneath this, just underneath this overlap support at 1.0812. Right, now, of course, the opposite can happen as well. So if you have lower claims and strong PMI numbers, that means euro is likely to reverse its trend, right? So that means you can place your stop loss. So any short euro trades, you can place a stop loss slightly above this descending trend line, right? And then we can target 1.0812 or 1.0810 as a potential take profit level as well. And should we see this level give way, where's the next support level, right? I see another pullback level here at 1.0766. This would be the next second support for the euro as well, right? We can also now draw a Fibonacci retracement from this swing low here up to the high on 15th of May, right? We can see, right, yesterday we can see, right, uh, the euro finding nice support at the 23.6% Fibonacci retracement here, right? Finding nice support here. So not only did the cloud help us identify an area of support, we also see the Fibonacci retracement at 23.6%. So as the euro was pulling back sharply, right, we would have used the 23.6% Fibonacci retracement and the cloud itself to help us identify a potential take profit level for the short euro trade. Now, similarly, if we do see the euro stall around here and we have data that's going to cause the euro to drop lower, first take profit level should be identified at about 1.0812, which is this overlap level. And should we see it pull back even further or drop even lower, then the next support area that we can target is, or the next take profit level that we can target is around the zone of 1.0766 here. Right, okay. What else? Let's see for the euro. Right, there's no real bearish channel or bullish channel. There's actually I would say there's probably a bearish channel here on the 4-hour time frame for the euro, right? I would say there's a pretty decent bearish channel here as well. Yep, let's highlight it as a bearish channel rather than as a descending trend line here, right? So of course, then we can then use the lower trend line of the bearish channel to identify as a potential support zone as well. So you can see here that it has bounced off this lower trend line once on 17th of May, then yesterday as well, Wednesday, and early this morning as well, right? So you can see uh, this lower trend line has been tested several times. So it looks to be playing the range as well. So you can use the lower trend line of the bearish channel as a region to identify a take profit level as well for any short trades. Okay, this is what we have. All right, Vicky, right, we'll cover gold as well after this. Great. All right, great to see the requests come in as well. Do drop them in early so we have time to go through the analysis, right? Like, let's get do drop the request in early and then we can get through the analysis together. All right, okay, let's move on to gold then. Great. Right, so with dollar index pulling back, right, since the beginning of May. Usually this is supportive for gold, right? So when we look at it in 1st of May as well, we see gold in an uptrend as well. But now we see gold prices pull back quite strongly. All right, Trevor, we'll cover Nasdaq and Dow as well for sure. So we'll cover gold now, then we'll move on over to Nasdaq and Dow. Once again, here we can see on the 4-hour time frame that prices has finally found support within the cloud as well, right? That doesn't mean it's going to find support at the top of the cloud every time or just in the second candle, but yeah, you can see generally it can help us identify a pretty decent area, right? So as gold was falling down since yesterday or since Tuesday onwards, right, we will be looking to use this bullish Ichimoku cloud to help us identify a suitable take profit level for the short trade as well, right? Remember, as prices are falling, you've gone short on gold. We will be using this cloud here to help us identify a potential take profit level, right? We can also use Fibonacci retracements and a pullback level as well, right? What I see here in terms of price action on 15th of May, right? This is a pretty decent support level as well, right? Price made a pullback here on the 15th of May before bouncing off this level very strongly, right? So this was a pretty decent pullback support level, which is also where gold does seem to have found support, right? So not only there's the presence of the bullish Ichimoku cloud, there's this pullback support level as well, identifying another major support zone, right? Now we can also draw Fibonacci retracement, right? We're going to start the retracement from here, 3rd of May, going up to the high on the 20th of May. You can see once again, right, that there's 3 factors that actually contribute to the identification of a major support zone here, right, based on the 4-hour time frame, right? Once again, we have the pullback support at $2,362 per ounce. We have the bullish Ichimoku cloud, and we have the 50% Fibonacci retracement, right? All 3 factors highlighting a major support zone, which is where price does look to have finally found a footing, right? So this is a major support. So this is why it's important to identify major support areas, because these can then be used to to identify your take profit levels for the short trades down. Now, similarly, I see a 61.8% Fibonacci retracement here at about $2,343 per ounce. So once again, I see a strong support zone here as well at 2,335. So what this means is, should we see a potential uh should we see a potential bearish breakout for gold, right? So should we see this bearish breakout take place, then right, I'll be using this support level and the Fibonacci retracement at 61.8% to help me identify my take profit level as well. So I have a zone, take profit zone, that starts from $2,343 per ounce, all the way down, or not all the way down, but down to $2,335 per ounce, right? So this is how we can identify the next take profit zone should we see a bearish breakout for gold prices here. Right, now what about resistance? Now that we see the dollar index, sorry, the gold sort of stabilize here, and when I look across this level at around 2,400, this was, remember, previously the previous all-time high, right? The previous all-time high for gold was at about $2,431 per ounce. And now, of course, it has made a new all-time high beginning on Monday, which was at 2,450. Right. Now, because this was the previous all-time high, which is major resistance area, what was previously a major resistance area can function as support, which it did very nicely on 20th of May, Tuesday, and then Tuesday, 21st of May as well. And also briefly on Wednesday as well yesterday. So you can see what was previously a major pullback resistance level, then proceeded to function as resistance, right? So this is a very nice overlap level, and I believe this can be identified as one major resistance level. And the next resistance that I would identify is this pullback level here as well. There is a pretty decent pullback here. Maybe I identify this as an intermediate resistance and another intermediate resistance at this overlap here as well, right? You can see here price running to resistance, support, and now potentially be resistance again here. All right, okay. So let's see. All right, okay, these are the key levels for gold here. Right, anything on the daily time frame? Just see if there's anything to point out on the daily time frame. No, okay, so you can see here, should we see this bearish breakout occur through the first support, we can also see that the Ichimoku cloud sits very close to the 61.8% Fibonacci retracement and the pullback level as well. So not only do you have the pullback support level at 2,335 and the 61.8% Fibonacci retracement, we also see the bullish Ichimoku cloud there as well. So should that bearish breakout occur, I think it'll be a good idea to identify your take profit zone around the 61.8% Fibonacci retracement rate. It's quite likely we're going to see pretty strong support here at 2,340, right? It's quite likely we're going to see very strong support here should we see a bearish breakout occur. Okay, so these are the key levels for gold. All right, then with that, let's move on over to Nasdaq as well, right? We just saw Nvidia uh announce its earnings, first quarter earnings for 2024 at yesterday's markets close, right after US markets closed yesterday. They announced their earnings, which was, I think, pretty good. Let's just quickly look at that because that's definitely going to have an impact on Nasdaq as well. So let's just take a quick look at Nvidia and how their earnings was, and how's the pre-market action for Nvidia as well. Wow, okay, you can see pre-market is already jumped above $1,000 per share, right? So it closed at about $949 yesterday. Then Nvidia released its earnings results at the end of the session. So now in today's pre-market, we are seeing a strong jump as well. So pre-market trading activity has already caused Nvidia to push higher above $1,000 per share. And that means, of course, that NAS 100 is likely going to push higher as well, right? Okay, so we can see that good results. Oops, let me just look. Oh, let's go on to daily first, right? Okay, so with earnings, right? So yes, earnings were released on Wednesday, 22nd May after the markets closed. It was an earnings surprise of nearly 10%, right? So the estimate was $5.60 per share. We saw the result come in at $6.12 per share, 10% increase. Revenue was estimated to come in at about 24.6 billion. It came in at about 26 billion, right? So a 6% increase as well. So in all, just looking at it on the surface, right? It was a very good earnings result with both revenue and EPS beating their respective estimates. And then we'll also have to look at what is the forward guidance as well. So what guidance refers to is what uh, the CEO and the team at NVIDIA, right, Jensen Huang, are predicting in terms of future sales for the next quarter, right, for the second quarter of 2024. So future uh, outlook is also good. Forward guidance is high. That means we're expecting to see EPS increase, expecting to see revenue increase. Then, of course, then we have strong fundamentals for NVIDIA to probably move higher as well. So if NVIDIA is going to climb higher, it's quite likely going to pull up NASDAQ with it as well, right? So now with that, we can move on over to NAS. Do I have it here on my shortlist? Perhaps I should save it here. No, I don't have it here on my shortlist. Okay, that's fine. Next time I'll just make a note to save it here. All right, so the instrument that I'm using would be NAS 100, right? So you can see here. All right, let's start. For indices, I usually like to start my analysis on a weekly time frame, right? Okay, so previously in 2024, this was the previous all-time high for the, okay, so the NAS 100 is the instrument that tracks the NASDAQ futures, right? So the previous all-time high for the NAS 100 was set on 18th of March, on the week of 18th of March, which was at 18,467. Now that, of course, it has broken through this previous resistance level here. I see a nice pullback support level at 18,334. So this is where the first support for the NAS sits. And the second support is, of course, going to be this pullback level here that occurred in the second week of April here. So that's where the second support for the NAS sits. Right. Now, of course, with it trading at all-time highs or close to all-time highs, how are we going to identify the next major resistance zone? Right. Remember, we have nothing to reference in the past. There's no swing high resistance here. There's no pullback resistance here. So in this case, we're going to rely on Fibonacci tools to help us identify the next potential resistance area. Right. So in this case, we run a Fibonacci retracement from here, 22nd of November down to 10th of October. We're going to be looking for extension levels. So extension levels are levels that are greater than 100%, and these key extension levels lie at 127% and 161%. So you can see here, the previous all-time high that was set in the end of March was actually at a resistance that was identified by the 127% Fibonacci extension. Now, of course, this level is no longer valid with price trading above it, so we're just going to keep 161%. Now, of course, 161% is a very far distance from where this index is trading, right? It's quite a huge figure up, but let's see if we can use a projection to help us identify any resistance that's a little bit closer. So in this case, projection uses 3 points. So we'll start from here, October 2022, July 2023, and ending at October 2023. Let's pull up all the projection levels first. Key projection levels lie at 61.8%, 78.6%, and 100%. So once again, you can see the 78.6% Fibonacci projection aligned, identified a major resistance level along with the 127% Fibonacci extension as well. I think I just keep the extension here so that we can truly see how we can use a combination of Fibonacci extensions and Fibonacci projections, right? In this case, we use the 127% extension and the 78.6% projection to help us identify a major resistance zone. So that means as the NAS is pulling higher here, after we see a bullish breakout occur here and it's driving higher here, we would then use this resistance zone to identify your take profit level, which is great, right? Because you can see here, after running the resistance here, the NASDAQ actually pulled back for a period of nearly 4 weeks, right? For a full month. It was pulling back 4 strong weeks of decline. And if you didn't book any profit here, you might be thinking, oh, why didn't I exit earlier, right? So by using extension and projections, it helps us really identify high probability resistance areas as well. So similarly, now we can see that 100% projection is a little bit closer than the 161 extension. So of course, that means my first resistance is going to be at 19,546. That means I'm going to be using this level here to identify a take profit level for the long Nasdaq position here. As we can see, another bullish breakout has taken place. Right, we saw this bullish breakout occur last week and it's continued this week as well. And that means we can use this first resistance to help us identify a suitable take profit level. And the next one is, of course, going to be at the 161% here. So that's where the second resistance sits. Right, okay, so this is what I have for the NAS. Next one was Dow. All right, Trevor, let's move on over to Dow. And it's time for some another analysis as well. So after the Dow, please do drop your request in the chat box, right? I'll be more than happy to go through the analysis with you. So similarly, for the Dow, it made its previous all-time high on the first week of April at about 40,056. So remember, DJ30 is the instrument that tracks the Dow Jones futures. So this was the previous all-time high, which is where once again it has sort of run into resistance. The new all-time high for this instrument is 40,111.50. But generally, you can see that this is a major resistance level here. Right, so quite clearly, this is the first major resistance for Dow. First support is this pullback level here, right? Because of the wick that goes down here, right? You can see this wick extends quite low. Maybe I'm more inclined to identify it from this point onwards here as the first major support. Right, of course, as I mentioned with the Dow also trading close to all-time highs, how can we identify the next major resistance area, right? Once again, we can use Fibonacci extensions and projections. So we'll start with an extension first. So that means running a retracement from the 3rd of Jan 2022 down to the 3rd of October 2022. You can see that the Dow Jones has already climbed above 127%. So the next extension that's valid is 161%. So let's use that as our first resistance for now. Right. And we can also use a projection as well, right? Remember we did a couple of projections. We did a projection for the NAS as well. So I think let's try one projection from here. Point 1, October 2022. Point 2 is here, 24th July. And third point is here. Okay, so you can see here in this case, price has surpass all these projection levels as well. But once again, the 100% projection did help us identify major resistance area as well. Of course, we can see here on the first week of April, Dow actually climbing well above the 100% projection. But generally, you can see that this area here did highlight a potential resistance zone. Right, okay, so of course, we can't use this projection, but we can try another projection, this time from here, 23rd of October, going up to 0.2, 1st of April, and down here to 15 April. Now, this is very nice. We can see that we have the 61.8% Fibonacci projection aligned very well with the extension at 161%. So what this means is we have a Fibonacci confluence. Confluence simply means you have more than one Fibonacci level at a particular price zone, and that adds to the significance of this resistance. So we're going to use 61.8% and a projection and 161% extension to help us identify the second resistance here. And of course, should we see the Dow continue to break higher, of course, let's just assume should Dow continue to move higher, then of course we can then use these projection levels at 78.6% and 100% to identify the next resistance areas as well. All right, okay. All right, right, Trevor. Yes, I have uh dropped a note to IronFX to the IronFX team last week. They're trying to work in on when we can fit it into the schedule. So hopefully, I think by next week, by next week I should be able to let you know when we have fixed this date for the fundamental masterclass. Right, it might be on a Wednesday session because Wednesday we do have education seminars as education webinars as well. So it might be on a Wednesday, or perhaps we may switch it to a Thursday as well. Let me see. Right. I definitely have not forgotten this. I'm just waiting for them to give me a confirmation on the date. All right, okay, so these are the key levels here. Right, okay, we can also run a Fibonacci retracement as well. This time starting from here, 23rd of October, going up to the all-time high. Let's pull up all the fibs. Right, we can see that the 38.2% Fibonacci retracement aligns very well here. And so let's just keep 38.2. And we can see 61 of identifying another resistance, another support area as well. Well, let's just tidy up the fib. So we can see 38% here, aligning very well with the first support. And if I were to identify the next major support, probably it'll be around here as well, 35,700. All right, sure. Okay, perfect. All right, Trevor. All right, we'll just wrap up the session with the dollar index. right? Okay, but before we do that, I'm just going to launch a poll as well, and truly appreciate it if you guys can give your feedback with regards to today's webinar as well. And then we'll continue with the wrap up of today's session, and we'll cover the dollar index once again. All right, thanks everyone for the feedback. All right, great to see the request. Uh the polls come in, right? Thank you for taking part. And yes, I'll just keep it running for about 5 or 10 more seconds, and then I'll close this as well. Oh, most welcome, Toph. Thank you very much for the kind words. Thank you very much. Okay, let me see. Right, great. Okay, gonna end the poll as well. Thank you everyone for your feedback. Truly appreciate it. And thanks, Toph, as well for your kind words as well. All right, okay. Now we'll just wrap up today's session with the dollar index. And of course, we quickly look through the calendar as well. Yeah. Okay, so on the daily time frame, right, we had identified that the dollar index is trading in this bearish channel since the 30th or first since May, pretty much the whole of May, right? And we have identified a strong resistance area as well. We have the upper trend line that identifies a resistance level. We have this pullback resistance at 105.08, and we also have the presence of a 38.2% Fibonacci retracement as well. Let me get rid of the 50. We don't really need the 50 here. Right. So we see it dropping very strongly now. And we also have unemployment claims and PMI data out today. So this bearish momentum could gain further traction if we see claims come in higher than the forecast. Oh no, sorry. If claims come in higher than the forecast, we're going to see dollar index drop even lower. And also if we see PMI data in the US come in weak, we're also likely to see dollar index pull back further. Now, should this bearish momentum gain further traction, I would then identify my first take profit level at 104.40, which is this pullback support level here. And then I would identify the next take profit level for the short trade at about 104.18. This is much more clearer on the 4-hour time frame. And let's take a look at that. Right, so we can see here a little bit more clearer here that we have the upper trend line of the bearish channel identifying a resistance zone. We have the 38.2% Fibonacci retracement also identifying a resistance, another resistance zone. Adding further significance to this resistance zone. And we also see this overlap level here at 104.90, right? Three factors that point to or three factors highlighting a major resistance zone. And also the fourth factor is the bearish Ichimoku cloud as well. In the 4-hour time frame, we can see that dollar index has stalled within the bearish Ichimoku cloud and it started to drop lower. So you can see here, this is a nice pullback support at 104.42. So I would target this level as my first take profit level for the short dollar index trade. And the next take profit level will be targeted at this swing low here at 104.18. All right. And before we wrap up today's session, right, take note, there's quite a few things, right? Okay, we got PMI data as well. So PMI data is going to be released at 1:45 p.m. GMT, which is after unemployment claims. So this is the forecast for tonight. So if we see a weaker set of numbers here, and we see uh claims come in higher than 222,000, right? This could potentially cause dollar index to fall even further, right? So if we see claims come in higher than 220,000, this is quite likely going to function as a bearish catalyst for the US dollar. So that means dollar index is likely to fall lower as well. All right. Thanks everyone for tuning in to today's session. Do look out for all upcoming webinars by IronFX. I wish you all a good trading week. Enjoy your weekend, and I'll catch you all at the next webinar. Thanks everyone. Take care and have a great week. All right. Thank you very much, Trevor. Most welcome. Most welcome.